Crude crossing above $75 a barrel for the first time in 3 years this morning, then taking a dip back below that level. Geopolitical tensions driving a lot of that volatility, as well as supply concerns. Joining us now to talk about it all, Chris Midgley, he's S&P Global Platts Global Head of Analytics, and Helena Croft, RBC Capital Markets Global Head of Commodity Strategy and a CNBC contributor. Good morning to you both. Chris, market's trying to absorb a lot of things here. Obviously, we got through the OPEC meeting, then we get the President Trump tweet asking Saudi Arabia to give more supply. We get a bounce this morning, and now we give it up. What do you make of it all?
Yeah, I think there's a lot of talk about OPEC right now, but I think the things that we're not talking about is the short-term demand disruption that we're seeing. 350,000 barrels out of Canada because the upgraders are out, and Libya somewhere around 700,000 barrels a day of lost production. So all the talk has been about Iran, but this has come a little bit early, these disruptions, which have sent oil prices up. We saw a very, very large stock draw in the DOEs last week, 10 million barrels, almost 9.9. So that's really given a lot of support to WTI, pushed it into strong backwardation. We see prices now above 75.
And Helena, we have these one-off supply disruptions that Chris mentions, and the premise, of course, of the president's tweet was that Saudi Arabia could turn on the taps and OPEC can make up this difference. Obviously, I'm guessing the market thinks otherwise.
I mean, there are real questions about how fast Saudi can bring this on. Saudi and Russia have reiterated plans to add an additional 1 million barrels. President Trump has asked for 2 million. And it's a real question is, does Saudi Arabia really have the capacity in the short term to ramp up 2 million barrels of production? And as Chris pointed out, we have proliferating supply outages. I mean, the Libyan outage is now 850,000 barrels. That could be extended throughout the year. Even if the Syncrude outage from Canada is cleared up at the end of July, we still have Venezuelan production continuing to drop. So this market is actually tightening. At the moment, we're questioning how quickly OPEC can bring on any additional barrels.
Even if Saudi Arabia does sort of cave to the pressure from President Trump and his tweet and increase production from here, Helena, is that necessarily bearish for the market? Wouldn't that put them more at a confrontation with Iran?
I mean, there are a couple factors. If Saudi Arabia spends all of their spare capacity, then we have no shock absorbers for any more supply disruptions. And as you're right, I think the geopolitics is also going to heat up over the summer. August 4th, when the first set of U.S. sanctions kick in, there's a real question of whether Iran is going to stay in this nuclear deal. What happens if they restart their nuclear program? And just today, they're making threats to potentially cause trouble to shipping lanes like the Straits of Hormuz. So again, I think we're headed towards a hotter summer in terms of geopolitics, which could put pressure on prices.
Chris, one investor has described Saudis as sort of similar to what the Fed is for the bond market. And if you think they're out of bullets, you know what's going to happen. Is that a fair comparison, thinking that if Saudi's sort of done or out of bullets, they don't have the spare capacity?
I think that's absolutely a great description. At the end of the day, as Helena says, maybe they've got 1.5 million barrels that they can put on the market. They've already added 640,000, so they're halfway through there. But I think the thing that people misunderstand is they can't put that amount of oil onto the market long term. They can do what we call water flooding of some of the reservoirs to increase production. They can empty some of their tanks. And we think that's what they're doing today. They're trying to get that oil on. But that's today to try to bring down oil prices, and yet the big problem is going to be November, where we see the big impact of these sanctions on Iran. 1.4 million barrels a day is going to be taken out. So we've got this imbalance now of about 2.4 million barrels a day of disruptions versus maybe something like 1.7 million barrels to 2 million barrels of spare capacity that can come on. So I do think, we're running out of more oil to throw back onto the market.
So the laws of depletion do apply.
They do, very much so. And I think that's another interesting point on depletion. Everybody is working extremely hard today in the industry outside of OPEC to maximize their production out of wells. But what we're doing is we're more rapidly depleting the existing wells and not investing so much in new wells or production facilities. There's very low levels of investment decisions being made for what I call the mega projects to supply tomorrow's oil.
All right, Chris, Helena, sounds like a pretty bullish picture. Oil taking a pause, at least for WTI right now. We'll see where it goes.
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.